Welcome to Unzip's interview series. So today we are meeting with Justin and he is going to talk us through financial planning. So would you like to introduce yourself and tell us about your role in your business?
Hey Carly, yeah, thanks. So my role's as the lead consultant at Blue Horizon Consulting. I started my own kind of freelance consulting business at the beginning of this year, which is quite interesting to do timing wise. But I've spent probably the last 10 years working in finance and accounting for bigger businesses, and just started my own business working with smaller businesses doing business analysis and budgeting, forecasting and planning. So,
Brilliant. Yeah, and you're loving it. Good move.
yeah, it's great. It's it keeps things so different. So I'm working with such a wide range of different businesses, fashion, retail, but hospitality, barbershops, hairdressers. So every day is a little bit different.
Amazing. So let's just take it back to the beginning because I always like to ask this question. So what was your background? So what did you study at uni, and then what's pretty much been your career history to date?
Yeah, so I studied Bachelor of Business at RMIT in Melbourne. So I majored in accounting. And I probably just kind of fell into that just because the marks were kind of good, but it wasn't the best or personal fit for it. But I moved in the accounting pathway initially, and pretty early on in the piece, I realised that the tax side of things and the debits and credits of accounting wasn't for me, but the financial planning and budgeting that gets involved in bigger businesses is the path I started to head down. And then I kind of spent 2 years, kind of a bit of a step out of the finance world into marketing when I went over to London. Did a couple of years there, and just building kind of Excel tools and dashboards. Met my Kiwi partner Elise over there, and we moved over here to New Zealand initially for a few years. And again, just moved back into kind of finance roles and working with bigger businesses on their budgets and monthly reporting. But moved over then to Australia where I worked with you at Forever New, again kind of in that accounting finance space, but a lot of it now working in specific sales channels, and that kind of really sparked an interest for mine. Learned a lot there, and moved on to Grilled, a burger chain where I spent 2 years again working with sales and marketing and operations. And then made the big switch big decision at the end of last year to move back to New Zealand and start my own kind of consulting business.
Amazing.
So a lot of it is just down to that better fit me working, I guess, outside of finance departments. So I like kind of working with a wide range of people, and this just seems like the best fit for that.
Definitely. And that's such an interesting set of skills in your background. So there's the creative side that goes of like within the marketing roles, which all of it, I guess it's the creative, it's the strategy, it's the numbers, and how nicely that will come together in your consulting business. So good set of skills for sure.
Thanks.
Cool. So today's interview is to specifically, I guess, drum in a little bit more to financial planning. And the purpose is to obviously help people watching this video to understand, like, A, what is it, but B, any tips and insider knowledge you can share with them. So do you want to start with just explaining, like, what is financial planning? Like, what does it entail? What does it mean?
So it can mean kind of a wide range of things. So depending on the type of business, but it's basically just forecasting or projecting future months, years, summer, winter collections in the fashion industry. So it can be as short or as long term as it needs to be. So some will be 3 or 5 year plans. Others will just be for the next 3 months. So it can really just vary, but basically it's just targets in place and plans to hit those targets in the long run.
Perfect. So are there any other terms as well that it could be referred to that people might need to know about?
So it's basically all the same thing: forecasting, budgeting, planning. they're all essentially the same thing. And yeah, 5-year plans could be called, 5-year budgets, or
Yeah.
yeah, a
Cool.
winter collection forecast. They're all pretty much the same.
Yeah. And I guess there is the biggest difference you could say is, well, you're always forecasting, but yeah, when would you primarily forecast, I guess, at the beginning of the season? And then, yeah, what's really the difference when you forecast to then, like, once you've got a plan, like the key differences between those two actions?
Yeah, so I recommend kind of constantly having rolling forecasts in place. So you kind of got to set your financial year budget at a point in time, and depending on the business and the brand, you might only have good assumptions for 3 of the 12 months. So
Yeah.
you'll put longer term projections in place for the final 3 quarters, for instance, but
Yeah.
then you're always constantly updating those when you get better information.
Mm-hmm.
Um, that tends to be the way most businesses tend to work. Things are, quite agile, and change regularly. So there's no point having a static one number for the year in place.
Yeah.
You put
Very
your
clear.
best kind of assumptions in place for that. Yeah, you always kind of go back and revisit. It might not be quarterly, it might be half yearly, but yeah, it generally would say at least once per half year
Yeah.
to revisit those numbers.
Yeah, definitely. And yeah, I guess then what factors affect, like, what are you looking for? So I guess you're reading like sales data, is it trends in the market? Is it politics? Like, what are the factors that you're, watching or looking at that help you to do the reforecasting?
Yeah, well, there's so many things that can cause that. Depends as well on the business's, I guess, age as well. So if you've
Yeah.
got historical data, that's always a good starting point for a more established business, and
Yeah.
trying to understand, trends on year on year or quarter on quarter. But yeah, for businesses without that much information, or starting up and on the rise, industry averages is always a benchmarking tool to come up against. But you've got to also, like you said, keep on top of what's going on around the world, especially this year with export markets, being all over the place, or in some of the hospitality sector that I'm working with.
Hmm.
um, Assumptions have got to just flow with what's going on in the world. Same with currency as well. I guess is a big one in the fashion industry. Buying in foreign currency, or selling in foreign currency. What's going on out there in that market that you're in is
Yeah.
very important to keep on top of. So yeah, you just got to have sound assumption sheets that do link in, or can manually feed through information that's going on in the world,
Yeah.
world politics, economically.
Hmm.
Yeah, it's
Okay.
it's kind of a bit, everything affects affects it in a way.
Yeah. So I guess then to make it like a little bit easier in a way, would you say that really a lot of the things you talked about, like, it's common sense, or would you say, like, you really do need to be reading like the Financial Times, and like, how can people find that information?
Yeah, I think you don't need to be across everything, I guess, in these fields. It's the big stuff that's going on. So anytime that you're selling in or buying in multiple currencies, it's keep on top of those regularly. But
Yeah.
the big picture stuff like coronavirus or political unrest in a country,
Mm.
you don't need to be kind of constantly checking, is this going on? You'll know about those things going on in the world. So it kind of becomes a second nature thing to be like, hey, let's look, there's an election here, or there's
Mm.
unrest in Turkey at the moment. We sell into Turkey. That's the level that you need to just be across at a top level there. And
Yeah.
yeah, I think FX is the big one that you should always be factoring in, because that can chop and change quite regularly.
Definitely. And yeah, that I can link a link into this video, so yeah, everyone can know, where to find that type of exchange rate data for sure. And yeah, so let's take it back to the beginning. So that was a really great explanation of the actual process. So for brands just starting out, obviously they don't have the history. So can you talk more around, like, I'm a brand new brand, I want to sell apparel, like, where do they start with, like, starting to build a budget?
Yeah, so a lot of when I go up and meet with a startup business in whatever the industry is try and get to know the owner or the people in the business to understand their knowledge going into the business, because they'll have a lot of the time they'll have a lot of historical info that they know, not within their business but within their, I guess, work history. So that's obviously a good starting point to just pick their brains on where they think things should go, based on what they've seen before. But a lot of it as well, if you don't have that information, it's starting really at a top level. Where do we want to get to within the first year, and what layers do we have to hit, or what markers do we have to hit that top line number? So you can start that way. If you really have no background information coming in, you just start from the top and say, hey, we want to hit 400,000 in the first year in sales. How much of that's going to be in the first quarter, second, third, fourth, and so on? And then what do we need? How much of each do we need to sell within each of those quarters? But it can really vary. It varies so much business to business based on their situation, and it can just be as high level or as detailed as possible.
Definitely. And do you have like a rough rule of thumb? So say if you're working with like estimates, so you don't know all of your costs, do you kind of always say it's always safe to add like a 10% buffer on top of your estimates? Like, do you do any like little tricks like that?
I think cost wise, it's always, especially for a startup business, is to build a little bit more in there, because you don't have the historical information. And as I'm knowing, as a starting my own business this year, there's costs that will just come up that you never thought of initially. And that's my job to be in business planning, and even I've come across costs that I wasn't expecting to see. But you've got to build that into your plan, and I've had that in mind, where I had this an allowance for unexpected circumstance, I guess. I'd lean a little bit against it in terms of putting that sort of stuff in, or overshooting as well on the sales side of it. But it is good to have blue sky numbers and ring fence them in, as we don't know yet how we want to hit there, and be aspirational. But I'd always try and err on the side of realism in that part of your plan, and then in the cost side, as much realism as possible, and then just a little bit of a safety net underneath that, if that makes sense.
No, definitely. I think that's super sensible. And would you say then for startups, because obviously a lot, not a lot necessarily, but people find like numbers quite nerve-wracking, and it's, probably could be out of their comfort zone. Do they need to literally, break it down month by month? Should they start with a season, or, do they really need to be looking at like, this is my first year?
I think for anyone that's kind of not comfortable in the numbers, it's keep it as simple as possible. But I would say at least do probably quarters or half years rather than a full year number. And the reason for that, so you can benchmark against yourself at any point in time. So if you just have a full year number, it's probably going to take 5 or 6 to 7 or 8 months to know, hey, how are we actually going against a full year number? Whereas if you have quarterlies, you'll know, hey, in the first quarter we missed by 5%. What are we going to do in quarters 2 to 4 to make up that 5%? If you only did that at a half year, you're not really realizing that till 6 months of the way into it. Or if you're only doing it the full year, it's you'll start to notice naturally about 8 or 9 months in, and it might be a little bit too late. But it's my gut feel for most businesses that I talk to is let's break these up into quarters and review them quarterly. Is generally the go-to.
No, smart, definitely. And when we're talking about, I guess, like reading reports, reading data, like should brands be really like fixated on, I made this much revenue, or should it be profit? Like, what are the metrics that they should actually be like reading?
It can really vary, because you'll have some businesses that the revenue, they're wanting to hit the market hard and not potentially be too revenue focused, because they really want to get the name out. So if that's what I learned with the business, that they're trying to make a mark and they're going to be a little bit lower margin initially and build the brand name up that way, that's their marketing strategy they're going with. Revenue will be the factor to look at there, but generally speaking, it would be your margin and profitability at the end of the days. How will businesses stay surviving? So yeah, that's generally the go-to, but it's not a hard and fast rule, because I have met a few brands that are more focused on kind of flooding or getting into the market, and even some big brands that you'll know, like Uber and businesses like that. Their model actually isn't to make high margins early; it's to really get their name and drown their name out in the market.
Yeah.
So yeah, it's not a set rule on it, but I'd say probably 95% of businesses, it's on profit and
Yeah.
margin.
Yeah, no, cool, definitely. Thank you. And yeah, when I guess this might not necessarily be like the first year, but do you recommend having like one plan for say every market that you're working in the world, or one plan for both store and online? Like how should you break your plans down? So this could be obviously when you grow and you're selling in multiple markets. Yeah, what's your advice with that?
Yeah, my advice would always be for markets, have their own specific plans in place.
Yeah.
So you're always able to see how you're tracking in certain markets. You might have, 9 out of 10 going really well, and just one problem area that's making a big impact on your business. So
Yeah.
if you only have that rolled up, it just takes so long to unpick, to work out where your problem actually is, and you might change things in markets that are working really well. So yeah, I'd always focus on breaking out your markets, and it's the same with your channels as well. The more, not just in fashion, but everything's kind of moving a lot more digital these days. So your online and your online channels and delivery channels need to be kind of broken out as if they're their own little market, in a sense. So yeah, that
Yeah.
would be.
Cool, definitely. And would you like one big factor, just thinking then, what happens with returns? So obviously, you gave a really good explanation of how you can break down and build the budget. So, this is my monetary goal. How do I get there? But how do you then factor in like returns? And is there a benchmark, I guess, especially in apparel or clothing, sorry, fashion full stop? Like, is there a benchmark of returns that people should be factoring in? Like, how does that work?
Yeah, and this is probably another good reason why it's good to separate your channels and markets out, because they're all so different. So
Yeah.
yeah, your traditional kind of bricks and mortar retail store, that could be about 8 to 10%, and you factor that in from the get go. So you build in the number of people coming through the door or coming onto the site, and then put a percentage in that will be a return sale. So you won't actually get to keep that one that's come through the door. But yeah, for e-commerce, it's roughly around 20% is the overall standard rate. But some channels that offer free returns, that could be 40, 50, 60% return rate. So yeah, you just need to factor that in. I guess when you'd know as well, when you're talking to the channels, they'll have their own numbers that they will be providing when you speak to them. So yeah, it's just probably another really important reason why it's not a wise move to just look at your business as a single channel, because the numbers just chop and change so much.
Yeah, totally. And yeah, great advice. And there's never any harm in asking, especially in wholesale, like what to expect and marketplaces, etc. So yes, cool, really good to know. And yeah, I guess now you've explained the process like really well in its entirety. Let's then just kind of like take a step back and say, you put yourself in their shoes. For people just starting out, are there any like key areas that you would say start researching, focusing on now, or any kind of just tips of this is how to do it, financial planning?
Yeah, I guess the key kind of things, not to be afraid of your numbers and not to be just leaving this to the side. It's just starting at the most simple level. Where do you see the business going? What data do you have available to build that up? The number of customers, the average order value that you'll be selling at. Just really pin the data down into real terms, I guess, is the way I like to explain it. Number of people through the door at a restaurant. What's your average average item on the menu? What's that going to cost? And then you're just multiplying the two by each other, and then you can expand out if that's by day, by week. So it's just really understanding your customer and the volume of them and what they'll actually be purchasing. And yeah, I guess that's just the starting point, and then from there it's breaking it down even further. And yeah, at the end of the day, numbers aren't going to be for everybody as well, so it's just trying to keep them in a way that you can manage them,
Yeah.
so you
Yeah.
can hit those numbers yourself. So you don't I don't have a hard and fast rule to say, hey, this needs, the longest formula Excel sheet going around is the only way to hit a good number. It really should be tailored to the business itself.
Yeah. Yeah, that's great advice as well. Like don't make it scary and overwhelming, like make it
Yeah,
possible, for sure. And I
'cause-
guess it goes without saying, like you have to use Excel, like there isn't really another program.
yeah. I think that's probably the best way. Like, other than having a full-on software that big businesses have, Excel's going to be your best option. But yeah, at the end of the day, even something as simple as 10 times 500, that
Mhm.
just on an Excel sheet or a piece of paper is better than not writing that down at all.
Yeah. Yeah.
So yeah, when it comes down to it, a simple plan is better than no plan at all.
Yeah.
And if
Yeah.
you find that the simple plan's not robust enough, then yeah, look at how you're going to make it a little bit more robust and
Mm.
suit your business's needs. But yeah, the starting points, at least have a go and don't be too afraid of it.
Yeah. No, definitely. And do you have any, in your history, are there any kind of training guides or like sources that you've come across that will help people, I guess, yeah, either with finance or Excel or yeah, any of it?
Yeah, there's a few. I still kind of use some myself. So I'm in Excel. I've been in Excel for probably 10 plus years. But there's a page, the spreadsheet page. Like, if I have to Google an old formula I haven't done for a while, so the spreadsheet page is quite handy. Somebody that's looking to really build their knowledge base up, Excel Exposure is another one. It is a little bit dry. So
Yeah.
only if you really want to up your skills in Excel, because there's about 10 to 20-minute video lessons there at beginner level right the way through to advanced.
Yeah.
But they're quite handy. If you think you're going to be working in Excel and you really want to up your own skills, that's a good spot to go. Yeah, and HubSpot's another that's just got a few little
Mm.
guides around how to do pivot tables and VLOOKUPs, which
Yeah.
yeah, they once you've got those, like, you'll be able to build your own plans or understand plans that are built for you quite well. So
Yeah, totally. And I guess that's useful to learn things like that when it comes to actually gaining like sales data as well, because we've talked about planning and forecasting and that side, but actually, yeah, sales data, you'll get it in so many different formats when you work in
mm,
different channels, and being able to pivot it and like make sense of the data is, yeah, it's a
yeah.
really will really help people for sure. And yeah, let's then just take another side step and ask a different type of question. So have you kind of seen any like common mistakes that fashion brands make that you could maybe share, to help people avoid making them?
Yeah, I guess there's one we just spoke of there, is not having a plan at all. So obviously not hopefully that common, but it's a big
Yeah.
mistake. But
Yeah.
the big one as well, it's not just for fashion brands, but for a lot of businesses, is kind of setting um, unrealistic goals.
Yeah.
So it's all well and good to be very aspirational in the goals that you set, but
Mm.
yeah, they do have to be achievable. And you can encounter some cash flow problems if you are setting something that you only hit 70% of because you've bought in the stock for it, and you might have to discount more than
Mm.
you originally planned. So yeah, big one for me is probably over promising early is a big one. And yeah, I like to work, or my way of working it with people, especially new to business, is set achievable goals in the first year, 2, 3 years of operation. One, for the feel good factor as well. You feel like you're winning. You feel like everything's going well.
Yeah.
You just naturally get people more engaged when they think goals are more achievable. But yeah, financially as well, you could come across some big stumbling blocks if you overcommit to an
Yeah.
unrealistic number.
Totally. Yeah, that whole strive to overachieve rather than underachieve is, yeah, it's not a bad thing.
At the same time with that, you also don't want to set the bar too low as well, because you could underbuy and leave potential sales out there. So it is a bit of a balancing act, but I'd lean more to setting it a little lower than you aspirationally want to get to, but
Yeah.
not too low that you miss out on, you sell out of everything.
Mm.
So yeah, it is a balancing act, but more this way than that way, if that makes
Yeah.
sense.
Yeah, totally. And, even everything you mentioned there, and that's why, becoming, a new brand, a new fashion brand, there's so many factors. Like, if you do overachieve, you've got to have that supply chain ready to then meet the demand and be able to. So there's a whole kind of loop in the process of knowing your ability, which then meets back to, a solid forecast, a solid financial plan, like what is, I guess, in your capabilities. And just because you touched on it and what you were just saying, talking about like cash flow management, do you again have any like tips? And especially, since COVID, that it's even more important that you're aware of your cash flow. Do you have any tips you can share?
Yeah, so it's just probably understanding in your business when the payment terms, if you're working with channels that pay you monthly,
Mm,
understanding the dates around all of those, and then the same for all your receivables. I mean, payables. Understanding the date that everything's due there, all your staffing costs and things like that. But yeah, it is quite a tricky and movable piece
mm,
between businesses. So I that's part of an area that can vary quite a lot. Obviously, in the hospitality sector, it's instant as soon as the customer doesn't leave with a tab. So there's just the one side of things. But yeah, in for fashion brands, it's really understand when you are expecting that money from certain sales channels.
yeah. And do you again, I guess, work any buffers into it to say like, okay, my payment terms are 60 days, but let's be honest, let's make it 70 because I probably won't get it in time? Or do you just kind of fix it that it should be and chase it through?
Yeah, I would put a little bit of a buffer in there, maybe 5-10 days, but I still would say chase it through, try
Yeah.
and get everything on that day. So have all your plans in place, the checkup on you know certain areas 5-10 days beforehand, and then on that due date. But yeah, it is good to probably have a little bit of a buffer in there to know your flows are coming through, and if they are 5 days late, you aren't short of cash. So yeah, it's always good to, especially early days, just to understand as well who are the most likely to be late.
Mm,
So assuming everybody's 5 days or 5% late with their payments to
mm.
start with, and then 2, 3, 4 years down the track, you can like work out who actually are the ones worth having that buffer in, and who are the ones that are always prompt and on time.
Yeah. Yeah, no, definitely. That's a sensible way of doing it. And that's the beauty of financial planning. Like it is a bit daunting in the beginning because you are starting from assumptions and nothing. But yeah, as you go, just keep that data safe and treasure it and learn from it. Like it becomes really exciting. And I'm saying that from my history of doing it. It's like, okay, what have we learned? How can we put a buffer in or grow? Or it really is just like being a data scientist in a sense. Yeah.
That
So
is it.
yeah, no, definitely. And I guess, from my perspective and what I, teach with clients, like financial planning is so important, like from day one. From your perspective too, can you kind of like say really from day one, like what should they be focusing on? Like really, what should it be to be successful?
Yeah, I think the big thing from day one is just having the plans is a great starting point. I guess everybody knows the statistics around of the number of businesses that don't make it to 3-4 years down the track. And a
Yeah.
lot of those businesses were sound business ideas, but they didn't have sound business plans in place. And that's where they've fallen over the 3 years. They haven't had a plan in place to identify early enough that things need to change and be agile enough to move. So, yeah, it's really important to know how you're tracking at all times. And yeah, I guess the other side of it's not just on the negative, but on the positive side, you could be doing really well in certain areas and under ordering, or shifting all your focus into areas that are doing it, say 6 out of 10 job, and there's this one little area that, because you haven't seen that it's overachieving and is in growth, you're just missing opportunities in there. So yeah, you're just going to undercook any potential future buyers that you do, because you don't know the information around who's performed, what areas of your business are performing well. So yeah, it's both sides of it. It's at the positive and the negative side of how a business is going. You're not maximizing your positives, and you're not moving away from your negatives if you don't have the data available or the information at hand to see how you're going against a plan or a target.
Yeah, it's like so true, so true. It's not always the oh my god, I've made this much money. It's how are you losing it? And that really, again, is like back to cash flow management. You really need to be aware of like the good and the bad that's coming out of the bank account, for sure. And even a dollar makes a difference. You can't overlook it. So that really informative. Like, thank you so much. And yeah, I guess specifically because you have just started your own consultancy in the last year, like put yourself back into that startup shoes, and what's kind of like your final piece of advice for those about to launch a business? Like, what would you say with regards to financial planning?
Yeah, the big one for me is just going back and not being afraid to have a plan in place. Being aspirational but being realistic is good, because you're always able to then push yourself to hit that aspirational number. But yeah, being realistic to know how you're going at any given moment in the year. So I know that's been super important for me this year. But yeah, I guess in the fashion space, it's super important when you're buying in for seasons and stuff to know, okay, we were 10 to 15% better than projected, so let's be more aggressive. We've got more to spend maybe on marketing, or we were 5% short, so we need to make that 5% up in the future year. So, or in the future season. So yeah, it's super daunting at first, I guess, not necessarily for me doing my own plan, having a numbers background, but it can be quite daunting for people who don't have that numbers background. But yeah, my big message would be just have a go. You need it. You definitely need to know how you're going in your first startup years, especially. So yeah,
amazing, thank you. And yeah, I guess just to let everybody know, do you offer services to be able to obviously help startups if they have the the budget to suit?
Yeah, definitely. So I'm quite a wide range of consulting options, and one of those is around business plans. And part of a sound business plan is the financial forecast. So we offer full business plans, which includes all the SWOT and competitor and market analysis. But yeah, we also offer it as a smaller package of just the financial plan or forecast. So that's kind of where most of our work is coming through from, is writing in that financial part of the overall business plan.
Yeah, amazing, perfect. And yeah, obviously I'll put a link of your website and services so everyone can know where to go to find you. But yeah, thank you so much, Justin. It was super duper informative, and I hope, and I feel more confident, but I hope everybody else feels more confident that it's totally possible. And simplify it and make it within your own comfort zone, but don't be off put by financial planning. For sure.
Cheers.
Yeah, thank you.
Cheers. Thanks, Carly.
All right, thanks, Justin. Bye.
See ya.